Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Thursday the 12th of the 8th 2021. Time is just gone 4:30 GMT, so 0435. Asian session coming to a close, European session firing up our lunchtime, North American session. Right, Wednesday the 11th, yesterday we had a negative opposed driver in the dollar at -52, front and back door flows mainly going into the pound at +32, into the euro at +26, and the yen was a negative rock at -6, activity ±58. Intra-week then, this is from Monday the 9th, open to about 15 minutes ago. We've got a negative driver in the euro at -57, front and back door flows mainly going into the dollar at +39, into the pound at +20, and the yen was the negative rock at -2, activity ±59. So we've got very low activity in intra-week, low daily activity, and intraday then, this is the Asian session to about 15 minutes ago. We've got a positive opposed driver in the yen at +11, front and back door flows mainly coming out the dollar at -8, out the pound at -4, and the euro is the positive rock at +1, activity ±12. Again, low activity. Right, let's have a look. What's been knocking about, or going to knock it about? Well, right, today we've got GDP for GBP, UK then. We've got tier 2 US jobless claims, and we've also got tier 2 GBP industrial production. So it's relatively light again today. Friday we've got Michigan consumer sentiment, which is a tier 1 event. So really not much going on as we come up to the end of the week. Yesterday, Wednesday the 11th, we had US CPI, which came in neutral to soft. The market had a little bit of a wobble, and then the German Euro CPI came in neutral as well. So that's where we are. Let's have a look at the flows and the asset classes. We did a very small amount of trading around the dollar complex yesterday. We made about 70 points, which is nothing to write home about. So basically the data was conflicting. The flows were relatively compressed. End result, we got out fairly rapidly on the positions. So anyway, let's have a look then. Euro is weak, except against the dollar, the CAD and the AUD. The yen is strong, except against the Swiss. The pound is strong, except against the yen and the Swiss. The Swiss is strong across the board. The CAD is strong, except against the dollar, the euro and the pound. The AUD is weak across the board. The NZD is weak, except against the euro and the AUD. And the dollar is weak, except against the CAD, the AUD and the NZD, commodity currencies. Right, so what have we got? We've got Swiss strength in the Asian session and AUD weakness. Fairly sort of standard, risk off sort of scenario. We'll just get rid of this and then we'll have a look at the asset classes. We'll start as usual with the US dollar index. So let's get going then. So US dollar index basically looks like this. It got pumped, it came back, it's went to a double top sort of thing. It's just come off slightly, but so the US dollar index is pretty high. dollar's pretty high. Gold, gold generally came off. It had that sort of double top arrangement, sub high, and then you had that spike down, and we're now 0.33 from the floor. So we're about a third from the floor. Gold's soft basically, although it's been messing about. Oil had that big pump up, it came right back. It's now sort of operating at about 0.5 half marks from the model floor on the top. So there you are for that. Wall Street then. Wall Street had that treble top, which it's now broken in a significant manner. S&P basically had a good break. It came back and it's had a break on top of that. So it's broken out again. So similar to Wall Street. The tech has had this double top arrangement and it's just sub the highs. So the tech's lagging. US 10-year then, this is the bond. Basically this is the price. So the price came right up, it broke again, it came back down, which means yields are strengthening, and now the price is thinking about going back up. And it's 0.48 from the high, so it's about half marks in terms of yield price ratio, but it's just slightly above half marks, so the price is starting to come up, so yields are starting to be a little bit weaker. And the bund, which is the European equivalent, basically had this big pump up in price, yields coming off, came back, and it's now working on coming up again. So it's 0.16 from the high. European yields are, in model terms, weaker than US yields at the moment. Right, copper. Copper had that long period of chop. It had that major break. It came right back again, and it's now half marks. So copper is operating between the floor and the high, and has been pretty choppy trading really. US steel. US steel basically came right off. It messed about for a long while. It's now back up near the highs. So US steel has basically come on for that, probably that infrastructure bill passing. So that's where we are. Let's have a look at, get rid of this, make some final analysis, and see where we are. So let's just get rid of this, and then our situation, as I said, is pretty static like the market at the moment. So let's have a look. Now the flows last week, if you remember, which was the 2nd of August to the 6th, to Friday the 6th, we had a negative driver in the yen, just at -211, and pretty almost matching it was the secondary driver, which was a positive dollar. So last week we had pretty strong dollar. The week before that, which was effectively 2 weeks ago, we had a very weak dollar. So the dollar was weak 2 weeks ago. Last week it came right up, and this week we're in a sort of in terms of intraday, intra-week, we're basically looking at a dollar which is neutral. So the dollars, all these FX complexes are pretty neutral. So let's look at the majors: the euro, the yen, and the pound. You've got equities right up at new highs, apart from the Nasdaq in the yen, and you've got commodities. You've got copper. Copper looks like it wants to go up. In terms of the pound, you've got this GDP data coming out. The dollar, you've had relatively neutral to soft CPI, and the pound is pretty neutral, and so you've got this sort of situation where you've got basically a neutral a neutral parked dollar index, and there's not much drivers, quite frankly, in the economic calendar to push it on at the moment. So you're likely to see the big thing is going to be small range trading probably at the moment. There's not much of a catalyst either way. The market is in a state of compressed sort of static equilibrium in terms of the flows. Equities are pumped. You're likely to see a rise in copper. Gold started to sell off as we thought yesterday, but then came back. I mean, the markets are basically just literally locked into a sort of a neutral position. So don't expect anything too wild. Famous last words. Neutral. So that's basically the case. You're likely to see noise-related GDP on the GBP. So that will be that. So it's really just a case of looking at the data, playing the noise, but they're likely, even if you get strong GBP data, it's likely to bounce and then come back. So it's likely to be small ranges anyway. So I hope that was useful. See you tomorrow for the daily briefing. Thank you for watching.